Welcome back, guys. Welcome back to Free Forex Basics. This is my YouTube channel, and like I've explained in my intro video, if you haven't checked it out, go check my intro video before watching any of these videos, and you'll understand what I'm doing, why I'm doing it, and who I'm doing it for. Anyway, I think we're going to get started with this video. This video is video number 4, and it's currencies. This is just a move on and a representation moving forward from the previous video that we did. Go check the other video out. If you haven't seen the video before this, video 3.1, go check it out first, and then we can go from there. You'll definitely enjoy that one. So, we were discussing earlier about majors. Now we're just going to get into all the currency pairs in terms of majors, minors, exotics. So those are the 3 different currencies types that are in the FX industry. FX standing for Forex. So you have your majors, your minors, and your exotics. So Forex trading is the simultaneous buying of one currency and selling another. Currencies are traded through a broker or a dealer and are traded in pairs. Currencies are quoted in relation to another currency. For example, the euro and the US dollar being euro/USD, or the British pound and the Japanese yen, which is the GBP/the JPY. When you trade in the Forex market, you buy or sell in currency pairs. So basically when you trade, you choose a currency pair. So let's take an example. Your currency pair that you decide to trade is GBP/JPY. It is the Great British Pound against the Japanese yen. So, each currency pair work in a simple manner in which they fluctuate up and down in price. This is very simple, one currency gaining strength over the other, which in turn makes price move. An exchange rate is the relative price of 2 currencies from 2 different countries. Exchange rates fluctuate based on which currency is stronger at the moment. So in other words, what they're saying is, in terms of the pound versus the yen, if the pound's economy is going well and everything's going great and there's good market sentiment, you will find that the pound will move up against the Japanese yen, which means the pound moves up and increases in value, while the Japanese yen's against the Japanese yen, which loses strength. Alright, the major currency pairs always include the US dollar. Cross currency pairs do not include the US dollar. Crosses that involve any of the other major currencies are also known as minors. So exotic currency pairs consist of one major and one currency from an emerging market. An emerging market is like South Africa, ZAR. So that is an exotic pair, for instance, would be the USD against the ZAR. USD being the major currency and ZAR being the emerging market currency. But just taking one step back as minors. Minors involve any of the major currency crosses. So in other words, GBP and JPY is a minor. Alright. The currency pairs listed below are considered the majors. These pairs all contain the US dollar on one side and are most frequently traded. Compared to the crosses and exotics, price moves more frequently with majors, which provide more trading opportunities. Alright, so if you take a look at this list, I'm just going to quickly run through it with you. By now you know EUR against versus USD, it's Euro versus dollar, Euro versus United States dollar. Then you have USD JPY, which is the United States against the Japanese yen. GBP USD is United Kingdom against United States. USD CHF, USD CAD, AUD USD, and NZD USD. I'm not going to run through all of them. You guys can take a minute, maybe pause the video now and just take a look, see. But this is the stuff you need to know. It's pretty cool. Alright, moving on. The majors are the most liquid in the market. Liquidity is used to describe the level of activity in the financial market. In Forex, it's based on the number of active traders buying and selling a specific currency pair and the volume being traded. The more frequently traded something is, the higher its liquidity, meaning that meaning that the movements are better. There's more flow in the market. It's better to trade. You don't want to go trading a pair that hardly moves. You're always wanting to trade a pair that moves a lot in the market, where price moves, to enable you the opportunity to execute a trade. So for example, more people trade the Euro USD currency pair and at higher volumes than AUD USD currency pair. This means that the Euro USD is more liquid than AUD USD, meaning that there's much more movement because of the liquidity in the market. Major currency pairs or minor currency pairs. Okay, currency pairs that don't contain the US dollar are known as cross-currency pairs, or simply put as crosses. Major crosses are also known as minors. While not as frequently traded as the majors, the crosses are still very liquid and still provide plenty of trading opportunities. The most actively traded crosses are derived from three major non-USD currencies: Euro, JPY, which is Japanese yen, and GBP, Great British Pound. So, if we take a look here, these are your Euro crosses. Now guys, I don't want to bore you too much, so I'll tell you what you do. In this instance, read on the left column the currency pair, read the countries to the right of that, take a look, maybe push pause on the video and move on when you're ready. Okay, same thing on this slide. You'll see the different pairs. Alright, we have, let's take a count: 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. 13 crosses there. 14, 15, 16, 17, 18, 19, 20, 21, 22, 23. Alright, 23 different crosses. So what I'm going to do here, I'm going to just go through each one. This is where you pause the video. Euro crosses. These are your yen crosses. These are your pound crosses. These are your other crosses. Right. Hopefully you've paused the video, gone through all that stuff. I don't want to bore you too much because a lot of you might already know this, so you would just carry on watching the video. So, exotic currency pairs. Exotic currency pairs are made up of one major currency with the currency of an emerging market, such as Brazil, Mexico, Chile, Turkey, Hungary, or South Africa. The chart below contains a few examples of currency pairs, which will be in the next slide. Want to take a shot at guessing what those currency symbols stand for? Depending on your Forex broker, you may see the following exotic currency pairs, so it's good to know what they are. Keep in mind that these pairs aren't as heavily traded as the majors or crosses, so the transaction costs associated with trading these pairs are usually bigger. Guys, I'm telling you now, trading exotic pairs is very, very risky. The spreads are higher, the brokers charge more. It's much more riskier to trade than trading the crosses and the majors. So over here, these are the different exotics. I'm going to just quickly run through them. You've got BRL, United States, Brazil, United States, Hong Kong, United States, Saudi Arabia, United States, Singapore, United States, South Africa, which is a currency pair that quite a lot of people know. Also, people call this Zarina. United States, Thailand, United States versus Mexico, United States, Russia, which they call USD Rub. United States, Poland, and United States, Chile. So guys, take a look, maybe pause, just look through the stuff. Look, it's not something that you absolutely need to know, but it's good to just get an understanding of everything that you see. Alright, G10 currencies. The G10 currencies are 10 of the most heavily traded currencies in the world, which are also 10 of the world's most liquid currencies. Traders regularly buy and sell them in an open market with minimal impact on their own international exchange rate. The next slide, let's give this a go. Alright, so you have the US dollar, the euro, the pound, the yen, the Aussie dollar, New Zealand dollar, Canadian dollar, Swiss franc, Norway krone, Sweden krona, and Denmark krone. Over here, you guys can push pause, like I say, maybe just learn the country, currency, and currency code. Well, looks like that's it for this video. But guys, I just want to end off by saying I do understand that this may seem boring and whatever, but really these are the absolute basics of Forex that you really need to at least know of and understand, because with this knowledge it'll piece together everything in the end for when you eventually want to trade. So guys, thank you very much for watching this video. Peace out. I'll catch you on the next one.